Let's also get some perspective on some individual movers. One of them today is Stitch Fix, and the stock is down 16%. Now, remember, this is a company that provides boxes, clothing boxes, basically, and people can then pick what they want to buy from boxes that they receive each month. Although I think they've also introduced now some other offerings where you can just buy the stuff outright. However you slice it, the stock is down today after missing estimates in terms of reporting a wider loss than estimated. But not only that, the company withdrew its forecast for full year EBITDA. They said, we're actively evaluating our marketing spend as we manage improvements to onboarding and conversion, and therefore we are withdrawing our previously provided full year adjusted EBITDA outlook at this time. Market doesn't look like that because the third quarter forecast that they did come out with was not positive.
Julie, I was walking around here in the NASDAQ, putting on my makeup, trying to think of how I could best summarize this quarter from Stitch Fix, and I think I got it. It reminds me of when I, as a kid, would be driven by my local garbage dump in town, and it would be a steaming pile of trash, and it would just stink. And I think this quarter from Stitch Fix really stinks. You have sales up 3%. This is an online retailer playing in a world where we all need clothes because we're going back out into the wild. This is a very disappointing quarter. Also, keep in mind, they're an internet business. As I just mentioned, they're not growing like an internet retailer. Sales up 3%, active customers only up 4%, withdrawing your guidance. This is just a continued disappointing public company. And look at the wild ride here, Julie, that Stitch Fix has been on. They IPO'd in 2017, $15 pricing. The stock's now under $10. The stock rose to $98 in early January of 2021 during that meme stock frenzy. Cooled down a bit. It was at $69 by June 7th, 2021, according to Yahoo Finance Plus data. The stock is now down below $10. It is unclear how this company could jumpstart its business and win back any type of Wall Street enthusiasm. Now, in Wall Street's credit, one buy rating on Stitch Fix out there in the street, 12 hold ratings and 2 sells. The street has been right on it.
I love the care and thought you give towards hitting upon just the right metaphor.
Everything gets a personal touch here at Yahoo Finance. We do it right.
By the way, one of those folks who has a sell on the stock is the analyst over at Wells Fargo who has an $8 price target.
He's getting a Starbucks gift card from me today. Good for them.
Yeah, and one of the things that Ike Burrochow wrote in response to this quarter was that it could potentially point to a level of saturation in interested future users, which means another way of saying that Stitch Fix is up against a wall, right? That it's hit its peak. Let's talk about Bumble here for a moment, and this is a very different picture than what we just talked about with Stitch Fix, because these shares are surging by some 38%. Now, they did report some disappointing numbers last quarter, but it has to do with the forecast here and the fact that the company is pulling back from Russia and that perhaps the consequences of that pullback are not as severe as the street had predicted. Now, Bumble owns an app called Badoo, which is one of the bigger dating apps in Russia, apparently, and also constituted a big chunk of Bumble's revenue. And it also has a business in Ukraine and Belarus, for that matter. And so it's pulling back from there, and that is the reason why it looks like the forecast is reassuring for investors, Sozzi.
Now, while we were just criticizing heavily the quarter, Stitch Fix, Julie, Bumble, this quarter was pretty good. Couple things I liked here. First, their guidance does not really incorporate what could be a summer of love out here. As we go back out into the wild, not me, I'm spoken for, but as we go back out into the wild here and people go out there and look for dates and they do their thing. So that is good, I would say, that Bumble's being conservative. They can set up the second half of this year looking to beat on sales and beat on earnings. Also, too, 75% of paying customers have been trading up to premium services. You love to hear that when you're a company like a Bumble and you're invested in a company like that. And at the end of the day, Julie, you have to pay money if you want to find your soulmate. It's just the reality we live in.
By the way, PSA, in case you missed it, folks, as you were watching that, Ryan Sozzi is spoken for. Don't try and find him on Bumble. All right, let's quickly do Oatly, which is also out. That company's revenue also coming in ahead of analyst estimates here. Oatly, the oat milk maker, though, those shares are down by almost 4%. Still posting adjusted EBITDA losses here, and the loss last quarter was $65 $6.6 million. Gross profit margin at 15.9% here. And it looks like the company's forecast for the full year, Soz, could be responsible here for the downturn in missed estimates.
Well, I want to show that we're not just criticizing Stitch Fix here. You put up a bad quarter, you're going to hear it from the team at Yahoo Finance. That's just full stop, bottom line. And this was not a good quarter here by Oatly. Great product. They have overrun the shelves. That's all fine and good. But look, this Oatly IPO last year priced at $17. Oatly is now a $6 stock. That is not good. They came out here this morning, losses in all regions of their business. And what I have to dig a little more into is in the Americas business, despite many of us drinking oat milk, despite their significant share in this space, $9.9 million adjusted operating loss. That was relatively unchanged year over year. Overall, I think you got the sense there still continues to be a lot of costs in Oatly's business as it ramps up production around the world. The street doesn't like to hear any of this.
Nope, it sure doesn't. And it hasn't liked what Oatly has had to say, judging by that stock price chart over the longer term.